Hello, agents. Hello, everyone. So today I just want to discuss a way to protect the clients with a really beautiful, simple, and inexpensive concept that's been around forever, but not very well used, or people don't think about it. So I just want to jump into it. And it's basically for people who are buying these multi-year guarantee annuities now that have a window at the end. It only gives you 30 days to make a decision before they re-up all those big early withdrawal charges. So here's how it starts. Let's just jump right into this. It's also great for if you're opening a new IRA and want to make ongoing contributions, or you just want to combine IRAs together or certain annuities together. It will work in that way too. But it's really right now I want to talk about for clients with recurring surrender charges. So this is a flexible premium annuities using flexible premium annuities. So everything we're going to talk about is guaranteed, and here's the inexpensive part. So this product, you can start with it in this concept. I'm going to go through multiple concepts here, but in this particular one, we're going to start with $5,000, right? And the minimum guarantee on this contract is 2.75. So you see here, the first year is 475. There's a base of 375. So that's all great if we do better, but let's just talk about, year one's guaranteed at 475. And then thereafter, let's just assume 275. What you're going to see here is I'm using this one, by the way, because it's available everywhere. It's very mainstream insurance company, A- excellent rated, and available everywhere but those two states, Alabama and New York, right? And you can start it with $5,000. But what I want to show you here is after 5 years, you can add money to this product anytime, but after 5 years, anything you add will no longer have surrender charges on it. So as you see here, they match off. So 59.98, 59.98, and on the assumed value 60, 62.96, 62.90. So they all match right there on the guaranteed values. So let's go ahead and take a further look at it. So this is what you can do. I'll break it down to where this one I show you adding money. So this one also starts with $5,000, but it assumes in year 6, the client ran out of another surrender charge product, let's say, and they're re-upping the surrender charges if he doesn't make a decision in 30 days. But let's say the rate's really low and it reverted back to say 1.5% they're offering or something like that, or even a lower charge, even a lower rate of say 3, but the client doesn't want to lock up for another 5 years. Well, they can take it. Let's say that value is now 250. They can dump it into this flex premium product and there's no more charges. So as you can see, the guarantee value, the cash surrender value, and the accumulation value are equal. So they put 250 in, they can, it's added to the 5,000 in the interest they earned. That's 262,984 on the cash value, which is your withdrawal value or your accumulation value. It matches. And that's assuming of the guaranteed rate on this one is 4.25 the first year and 2.8 forever. So they can go in and leave anytime knowing that they can't earn less than 2.8%. So it gives a lot of flexibility and just extra options for an inexpensive amount of $5,000. And this one's less available, but these products are available throughout the industry. Just you can't illustrate most of them. So these are the ones I can illustrate, but we can illustrate those. We can get these from many different companies that start, and even qualified. If you do it on qualified money, you can start even less. But let's just say 5,000 is a great point. Most of them will be available at about $5,000. But let's say, there are some out there that you can start for as little as $250. So you can put $250 in, and then after 5 years, in the 6th year, you can add the 250. And again, your guaranteed accumulation value and your cash surrender value match off 257, 257. So as you can see, there's no more surrender charges in there. So again, if the client is out of surrender in the 5th year, you can move it over here. They don't have to renew with that current company or rush to buy some other product that will have early withdrawal charges put back in or cash out and take a taxable hit. So these need to be thought of, though, at the time you purchase or are 1035ing into a new one. You can do a partial, put $5,000 into the flex product and put the rest into the newer product with the high rate that has a renewal charge and after 5 years with a 30-day window. As long as you don't touch either account or withdraw from either account for 180 days, you're fine. And if it's qualified money, you can totally do it because they don't have those same rules as it's all taxable money, right? So anyway, that's just a breakdown. And this one happens to have a 3% minimum guarantee. And those are available now here going into 2020, 3, we've seen minimum guarantees have increased. So that's why this is more viable right now going into the future. So, hey, if you're interested in this, you can just visit my website, annuityexperts.com. Go ahead and click on that MYGA rates. It'll pop up an area where you can go ahead and click on deferred annuity illustrations. And in the comment section, tell me you saw this video or tell me what you want to do. And by the state of issue, I'll know what's available and tell you the minimum you can jump into that with and how long it takes. We do have these as short as 2 years with, very limited availability. So if you have a client right now that has maybe 2 years left before that 30-day window, and you're in one of the states that's approved, we might be able to help you with that now, so in 2 years from now when it matures, or 3 years, whatever, you can jump into something that will be liquid. Or even if they've been in it a year, you only have 1 year of out of surrender charge, 1 year with surrender charges left. So a lot of availability, a lot of flexibility there if you do this. So it's just a really basic, simple concept and if you do the illustration request right, you'll get this page pop up. So anyway, yeah, that's the end of my presentation. So again, this is really great for advanced planning. So you can take any stress away at the end of the surrender charge period. You know you have a minimum of 2.75 to 2.8 to 3% maybe. So you're in that high 2% range with no early withdrawal charges. And most of these agents will pay some type of commission to you as well. So you're not like doing it for free. It's reduced usually off the first year comp because there's no charges. It's not locked up. The money's not locked up for any length of time. So again, any questions on this, you can give me a call, 800-373-9697. Follow me over there for the most up-to-date information, YouTube and LinkedIn. And thank you for watching. And if you have any questions, again, give me a call and talk to you later. Bye-bye.